All right, so today we are going to run through a trade. I'm going to show you my strategy, and then I'm going to show you how to put on a trade. We're going to run through the whole process. So let's begin. So my strategy involves moving averages and multi crossovers, but that's not all. Okay, so what it would involve is a multi crossover, then your RSI being in the bearish control zone, which I mean, we came out of it a little bit, but I mean, look, we dropped way deep in it. Um, so I want to see that RSI below its signal line and the RSI line in the bearish control zone. I also want to see the MACD below its signal line, printing dark red bars on the histogram and have a negative slope, both the signal line and the MACD line. So, and also, I want to see the BBWP cross its moving average to the upside so that I know the move is coming. And usually it will. The BBWP usually will, because once those three signals happen, volatility usually is not far behind. So I wait for that to happen, and then I put on my trade. As soon as that BBWP starts to expand is when I put on my trade. So I would have got in right basically at this candle, this big candle. Even if I got in at the bottom, I still would have had, and I did take this trade, I still had a 6.25%. So if you put that on some leverage, I mean, that's pretty good. Usually I trade with 10x leverage. I would not, I would not advise that if you just started trading, because you will get wrecked. All right, so let's go through the strategy one more time. I wait for I wait for a multi crossover on the moving averages, the 21, the 50. By the way, this is the yellow one's the 21, the red is the 50, the blue is the 100, and the purple is the 200. So the more conservative signal is to wait for all the moving averages to converge, and then all of them cross over and fan out. That's what I forgot to say. The fan out confirmation is what you want to wait for. So I wouldn't have got in at this big candle. I would have got in about right here, which is fine. I made quite a bit on that trade. But remember, the RSI has to be in the bearish control zone below its signal line. The MACD has to have a downward slope below its signal line, and printing some dark red bars on the histogram. As the BBWP starts to expand and gets above its moving average. Those are the three indicators that I use. Well, four indicators. And so that's basically one of my signals. That's one of my strategies right there. And it is one of my best strategies. It has a very high hit rate, but you have to wait for the fan out confirmation. Okay. So as you see, after that, the 21 and the 50 cross the 200. That is the more conservative signal. Excuse me. You wait for that to happen, and you still would have made, even if you'd have waited for the 50 to cross the 100, you still would have made 6%. So you put that on leverage, that's pretty good. But like I said before, I would not advise to use leverage at the beginning, because you can win a lot, but you can also lose a lot. All right. So that's the strategy. Next video, I'll share another strategy. But for now, I'd like to use one of my best ones, and you can copy this strategy, use it for yourself, and see what happens. But remember, you have to wait for the fan out confirmation. All right. You don't just want to, because sometimes, and especially in ranges, the strategy does not work in ranges. It'll fake you out every time. So don't use this strategy in ranges, because they'll just converge together and then diverge and then converge again, diverge, converge again. All right. So yeah, it doesn't work in ranges. I have a different strategy for ranges, and I'll share that in the next video. So let's go on to and then exchange, and I'll show you how to set up a trade. So you got your stop, your price, and your amount here. All right. It doesn't have a take profit because I'm not signed in. I think that's why. Yeah, I'm just using KuCoin right now just to show you kind of how to make a trade. So what you would do is your stop loss is where you want to exit if you're wrong. Okay. So, like I said, the stop loss is if the price that you want to exit at to where you lose money, okay, or you're break even. If the price gets, far away from your original stop loss, you can move that stop loss to break even. But watch out, because Bitcoin will have these wicks, and they're stop loss wicks. They're literally to get you out of the trade. And then it'll go the same way that you thought it was going to go. All right, so there's your stop loss. All right, and then you have your price. This is your entry price. All right, so that's the price that you want to enter at. Now, I'm on a limit order. There's a limit order and a market order. The limit order is you actually picking the price. A market order is you just choose the price that the current market is at right now, which the fees will always be higher if you pick a maker or a taker trade, which is what it's called. That's a taker trade. A limit order is a maker trade. You make the order. All right. Then you have your amount, and that's the amount of BTC that you want to trade. So you can pick 25%, 50%. Now, this is your portfolio. So, you might not want to use 25% of your whole portfolio. You might want to use 10, because then you can have 10 trades before your account's gone. And if you win, you know what I mean. But I would advise to use 5% of your portfolio. Most of the time I use 10%, but I've been doing this for a while. All right. So there's your amount. And then the next thing that you would have is your take profit. All right. You'd have a take profit bar right here. And that's where you're going to take your profit, obviously. So let's go back to the chart, and I will show you where I would put my stop loss and my take profit at. All right, so if we were using this signal and I got in down here, I would put my stop loss at this last wick. All right, because if that came back up, that means it was a bull trap. Now, there's different scenarios for your stop losses. A lot of people will put them right at the last high. I do not do that. I put them higher than that, because you'll have these wicks, because everybody, the whales know and the institutions know that people are putting their stop losses right at the last high. All right, because then if you get back above it, you're making a higher high and the trend's probably reversing. But you have these wicks. Like, look at this wick right here. That's a stop loss wick. You know what I mean? Because people, look at this. People had their stop losses at this closure of this high. And look what happened. Your stop loss got hit, came back down, went the way you originally thought. All right, so don't put your stop losses too tight. All right, put them a little above the last high. Like if this was the last high and the last closure, 23.68, and then you got your wicks coming in at 23 or 24.39, I would put mine at about 2,500, a little above that, because then I'm not going to get wicked out. All right, and I always use closures, but I put my stop loss above the last wick, the last high wick, the local highs wick. Okay. So yeah, I mean, that's really about it. I'll go through the strategy one more time. Multi-crossover. All right. Your 21 and your 50 has to cross your 100. This is the more aggressive trade. The more conservative trade is waiting for the 21 and the 50 to cross the 200. All right, because that means they already crossed the 100. You want to have your RSI in the bearish control zone below your signal line. You want to have your MACD below its signal line, below the zero line, printing dark. Well, it doesn't have to be below the zero line. Never mind that. That's just more of a bearish trade. And your histogram has to be printing dark red bars on the histogram as your BBWP is expanding. Now, you could do it as soon as it turned around and had this green color, because you knew it was probably going to cross this moving average. Your moving average already started to turn around, and both of them has a positive slope, and that's when the move's going to happen. All right, so, and then one more time, you got your stop loss, which is where you're going to get out at and lose money if you're wrong, or break even. You got your price that you want to enter at, okay? And then you have your amount of your account. I would advise using 5% because then you can have 20 trades. You can have 20 trades to make money with, all right, and build your account. So if you start losing trades, take a break, all right? Just take a break. Daddy's working. Daddy's working, go. So yeah, you have 20 trades to build your account. But like I said, if you start losing trades, take a break. Don't revenge trade. You know, don't try to make the money back real quick. Daddy's working. Go play. So yeah, you just want to take a break. You don't want to revenge trade. And 1 second, please. Go. Daddy's working. Go to your room. Okay, I'll get it for you. Just go. Sorry about that. But yeah, don't revenge trade. All right, and don't trade with too much. You know what I mean? Especially first starting out. You don't want to make these 25% trades with 10x leverage. You know, it looks sexy and all that, but you know, it's an easy way to get wrecked. It's an easy way to get wrecked. So yeah, I mean that's really about it. If you guys like this video, like and subscribe to the channel. Check out the links in the description below, and turn on those bell notifications. Now we're going to have questions, so hopefully everybody stuck around, and just wanted to let you guys know to support the channel in this bear market. So everybody can turn their mics on. We're going to have some questions if you have any.
Would you say the ranges for your EMAs were?
So the 21 is a EMA, the 50 is a EMA, the 100 and the 200 are SMAs. Those are what I use.
Oh, okay. I figured they were all set as EMA.
No, the 100 and the 200 are SMAs because I want a smoother longer term trend reading, and with the 21 and the 50 I want a quicker trend reading. And it really works with this strategy too, because then you get early signals. You know what I mean?
Interesting.
If the 21 and the 50 were SMAs, you would have to wait for your signal a little longer, and you would lose opportunity cost. You would lose some profit.
Got you.
Any other questions? Kolos, do you have any questions?
No, I'm good, buddy. Thank you.
Okay. All right. Well, if that is it, once again, if you like this video, like and subscribe to the channel. Check out the links in the description below. One being the Discord. Discord is the place to be. We talk about these moves before they happen. We figure out this market collectively. Definitely join the Discord. Everyone have a great morning, great afternoon, great evening, and I will see you tomorrow.